Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Tesla stock, Nio Stock, Mullen Automotive stock, and Lucid stock. We're going to start off talking about how Tesla's TSLA stock price has surged off of their recent earnings news, which is absolutely fantastic. So we're going to be analyzing the stock to determine if this momentum can continuously keep up with itself so the stock price can continuously head higher. Then we're going to talk about a lot of Nio news and why the Nio stock has dropped below the broader stock market, where the stock price is headed. We're going to be going over their latest news updates, price predictions, what Nio stock could be worth over the next 5 years, why some financial analysts and reporters are very negative and bearish when it comes to Nio, saying that the company is only worth around $10 per share, and then we have other analysts that say it's a fantastic buying opportunity right now. So we're going to dive into both the bear case and the bullish case to determine where the Nio stock is headed and what their future projections look like. Then we're going to go over and talk about Mullen Automotive's MULN stock and why the stock has dropped by around 14% and where that stock could be headed in the future. So we're going to be going over their latest price targets and price predictions so we as investors know whether or not this is a good buying opportunity or not. And then lastly, we're going to talk about Lucid's LCID stock because they have received a multitude of new reservations, coming in at around 4,000 to 5,000 new reservation orders for their Lucid Air vehicle. So for more videos like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you were new, and without further ado, let's just jump right into today's stories. So Tesla, as you all know, is a vehicle manufacturer that also focuses on green renewable energy. Right now, the TSLA share price is hovering at around $808 per share, while professional investors think that the company is worth anywhere between $500 to $1,300. The reason for the recent spike in the TSLA stock price is because after Tesla released their quarterly results, it beat expectations, which absolutely ignited the TSLA stock price, causing it to rally, and we actually predicted this in a past video. I also want to point out that even though we have macroeconomic headwinds, which means that the overall macroeconomic economy is rather negative right now, the TSLA shares are still increasing in price. So today we're going to determine if this momentum will be kept up or if it's just a blip and eventually the stock price will recorrect. Now, before I go into this news, I do want to say that the TSLA stock, in my opinion, is a good long-term play because I really like the long-term prospects of Tesla and the multitude of other things that Tesla does as a company. Because remember, they are not just an electric vehicle manufacturer, even though that's probably how most people view them. So what specifically caused the TSLA stock price to surge? Well, according to the quarterly profits, they breezed past analysts' expectations, who estimated and projected that Tesla would only bring in around $500 million worth of free cash flow, and they actually brought in around $619 million, which is absolutely phenomenal. I also want to bring to your attention that this actually marks the 6th straight day out of 7 trading sessions that the stock price has appreciated, because last time we looked at it, the TSLA stock price was worth around $775 per share, and analysts still think that the stock could literally almost double up to $1,300 over the next 12 months. So this begs the question, is the TSLA stock still a good buying opportunity? Well, I say yes, because when they eventually perform their stock split, which is a prediction that I made over 6 months ago that they would do, and finally it's coming through to fruition, that's going to cause a fantastic catalyst that's going to take the TSLA stock price even higher. Also, I want to point out that around 37 analysts that have been surveyed by Seeking Alpha, around 14 of them say that this company is a strong buying opportunity right now, with another 8 of them saying that it's a good buying opportunity. On the other hand, we have 10 hold ratings for the company, 4 sell ratings for the company, and 1 strong sell rating for the company, because they believe that even though Tesla is ranked as an A+ company for their profitability, an A company for their growth, an A- for their momentum, but they have an F for their current valuation, which means that a correction could ensue for the TSLA stock price according to the more bearish investors. However, I think overall that Tesla is a very foundationally strong company, but I do believe that it is trading at a large premium right now. But the question is, can Tesla eventually scale into that premium that it's trading at? And that's something that you need to mull over in your head to make sure that it aligns with your personal risk management policies, your investing strategy, and your personal future projections for this company. But now let's move on and talk about Nio Stock. There's a lot of news surrounding Nio right now. And if you didn't know, Nio is also another electric vehicle company, which is headquartered over in China. And right now, the Nio stock is trading for $19 per share, while stock experts think that the company is worth anywhere between $25 and $67 over the next 12 months. There are also other projections from retail investors that think that the company is worth anywhere from $25 to $80 over the next 12 months, but we're just going to have to wait and see. I want to point out that the reason the company is trading below $20 per share right now is that the company lost around 15.77% of their overall stock value within the last month, which is not good because their overall sector, which is the auto, tires, and truck sector, gained around 2.1%, while the S&P 500 gained around 1.44% in that same amount of time. So it's not really good to see that the overall stock market is outpacing Nio at this particular time. Wall Street will also hope to gain some positivity as it approaches its next quarter earnings report, which is something to look into. Zacks actually gives us some projections for the company, saying that the company is going to bring in a loss of 63 cents per share for the full year of 2022, and they're supposed to bring in revenue of around $9.1 billion. This would represent a change of around 40% increase from their earnings per share and around a 62.46% increase in their revenues, which to me is absolutely phenomenal. But despite this, Zacks Rank actually still thinks that the company is a selling opportunity right now because they rank it a 4 out of 5, with 1 being the best and 5 being the worst. Now, the reason why Zacks Ranks actually does this is not because of their financial projections, but because of other risks involved in the company. Now, I am a long-term investor, so I would rather look at the next 5 years of the company and not the short-term headwinds that the company could experience in the short term, such as short seller reports, the threat of the company being delisted, and other short-term problems. Because I want to point out that in 2019, Nio produced around 20,000 electric vehicles, and then in 2020, they more than doubled that by producing around 43,000 vehicles. And again in 2021, they more than doubled again to around 91,000 vehicles. However, in 2022, they are experiencing a slowdown, with so far in the first half of 2022, Nio has only delivered around 50,000 units. So even if we take that first half of the year and we double it to 100,000, clearly that is going to signify a gigantic slowdown for the company, and people are going to liquidate stocks, which to me is going to be a good buying opportunity. Because if we look at their price to sales ratio, or rather their forward PS ratio, they have a better PS ratio than Tesla, Rivian, Lucid, Li Auto, and Xpeng, coming in at only 3.7, while all of the other companies, specifically Lucid and Rivian, have an absurdly high PS ratio of 24 and 15 respectively. So honestly, I think Nio is actually a better buying opportunity than Lucid and Rivian, but that's just my personal opinion based off of one accounting metric. But like I said earlier, there is bad news for Nio stock right now because they had a short seller report basically saying that they are fudging their numbers for their financial metrics, so Nio has set up an independent committee to investigate these allegations. And if these allegations are found out to be false, this is actually going to cause the Nio stock to rally and reverse their current negative trajectory. Also, I want to say that Nio is continuously expanding globally, particularly in the European market. So overall, Nio is definitely in a good position. Even though the stock price could fall to around $10 per share, I think in the long run, over the next 5 to 10 years, this company could be a fantastic performer. Another problem with the company is the impending delisting risk, and many investors really just aren't taking this seriously right now because shares of Xpeng, Nio, and other foreign companies have a potential chance to become delisted due to the policy which is called Holding Foreign Companies Accountable Act, also known as the HFCAA. The article goes on, and I quote, "If U.S. regulators do not receive audited filings from foreign companies for 3 consecutive years, then the companies may face delisting from U.S. exchanges." And some people think that Nio is already abiding by these rules, but they're really not. Even though, yes, they are audited, they haven't been audited by a particular entity. For instance, Nio has indeed filed their 20-F form, which incorporates their audited financial statements for the fiscal year which ended on December 31st of 2021, and they filed that with the U.S. Securities and Exchange Commission. However, even though, yes, this is something that is very positive in the form of an audit, it really doesn't meet the criteria of this new policy. This only validates the Securities and Exchange Act of 1934. However, it does not technically meet the new policy. So what would they actually have to do? So under the Holding Foreign Companies Accountable Act, the Securities and Exchange Commission, according to the Seeking Alpha article, and I quote, can prohibit the trading of ADR shares of a company that has been audited. Again, it can prohibit the trading of ADR shares, which foreign companies normally have ADR shares, because you're buying basically a shell stock or a shell company. And even if this company has technically been quote-unquote audited, such as in the case of the 20-F form, the company can still be delisted because the working material of the company has not been audited or cannot be audited by the Public Company Accounting Oversight Board. That's the thing that they need to meet for the company to not be delisted, and so far that has not happened as of right now. So we really need to get our facts straight when it involves Nio potentially being delisted. Also, I want to point out that Nio is having a general shareholder meeting for their Class A and Class C shareholders on August 25th of 2022, so hopefully management or the company gives us more information on these things that are going on, such as the potential delisting or even the short seller report. Right now, around 270 Chinese companies are on various US stock exchanges, and these companies have until 2024 to comply with the policy of the HFCAA, otherwise they could be delisted. Now, what's really concerning here is that Reuters recently reported that Congress is waiting a bipartisan legislation to potentially ramp up this policy compliance deadline to 2023, which would eliminate an entire year, which means negotiations between the US and China really need to take the main stage and eventually come to a complete conclusion. The reason why China doesn't want to give this information to the US is because apparently Nio and Xpeng have quote-unquote sensitive data that the Chinese government doesn't want the United States to know. So hopefully the United States and China can enter a resolution in regards to this particular company to where both countries are happy. If they do not arrive at a conclusion or resolution, then yes, these companies could potentially be delisted, so I want to keep that on your radar. Now, what about bears and naysayers saying that the fair value of Nio stock is $10? And now, right off the bat, I actually agree with them here. However, I personally don't think Nio is worth $10, even though, yes, their fair value is $10. So I'm going to have to explain this. First, let's go over what the article lays out and what I agree and disagree with. Like we talked about earlier, 2022 is not going to be a fantastic year for Nio, mainly due to their decreasing delivery growth prospects in China and multiple supply chain issues, on top of the short seller report of Nio potentially fudging their numbers and the threat of delisting. So it really doesn't look very positive for Nio. However, the author of this article believes that the Nio stock is overvalued and that the fair value is worth no more than $10 per share. So let's look at his evidence for that. So investors independently think that the company is worth anywhere between $25 and $67 per share, but yet this article is saying that the company has a fair value of $10. So the reason why he says this is he makes a price to sales argument here, and like we talked about in our previous article, Nio actually has a more impressive price to sales ratio than a multitude of other companies, coming in at around 3.7 at the time that article was written. However, that is their forward price to sales ratio. Their current price to sales ratio is around 5.5 times their sales, which is why this particular investor is calculating the fair value based upon their current PS ratio. So he says that the market anticipates that Nio is anticipated to earn around $15.9 billion worth of revenue next year, which is substantially higher than their full year 2022 metrics of around $9.1 billion. So I can't wait for 2023. Honestly, if you're a Nio investor, that's something to look forward to. They also have a market capitalization of around $35 billion. So all we have to do is divide these and we get a sales multiple of around 2.2 times based on their forward sales, which to me is absolutely fantastic. I really don't understand why this particular article is bugging on Nio for a very impressive PS ratio for a growth company. Now, we'll talk more about that later. He says that Nio is significantly overvalued even at 0.2 times their revenue. So if we wait for the company to be a 1.1 times their sales multiple, that means Nio stock is going to be worth around $10. And honestly, I agree with him. Yes, his numbers are correct and his math works. However, you can't take a growth company, which is literally actually valued upon the future stock price appreciation, the future earnings per share, and the future revenues to what a value company should be worth. So to put this into perspective, investors buy growth stocks not based on the current price, but rather what the future price of the company is going to be worth. So this means we can't really calculate a quote-unquote accurate price target based off of the fair value of Nio stock. Now put it this way, if Nio dropped below $10, I would absolutely load the boat on this company because that would mean that it has fallen below their fair value price. However, investors understand that if they are willing to hold on for the next 5 to 10 years, the company is going to be worth significantly more than it is right now. So they are willing to pay a premium of the current stock price of around $19 to $20 per share, even though the fair value is around $10, because they are anticipating that the company is going to scale their revenues as well as their earnings per share. So yes, this author is technically right if you use only current metrics and don't look at the future whatsoever. However, if you incorporate the future forward earnings per share and revenues, I would say that right now, technically, the company is trading at a discount depending on what point of time or what projections we are using. So that is my spiel in response to this particular financial reporter. Now, with that being said, let's talk about another electric vehicle company that I am not bullish on, which is going to be Mullen Stock, ticker symbol MULN, which currently trades for 83 cents per share, and it's fallen around 14% recently, even though one analyst thinks that the company could surge to $23. Now, the reason why this is misleading is because only one analyst is covering the stock, and in my personal opinion, I don't find that particular analyst reputable at all. The reason why the MULN stock has fallen so much lately, and if you didn't know, Mullen is another electric vehicle company that is trying to ramp up their production, and supposedly they have phenomenal battery technology. But the reason why the stock price has fallen so much is because in the recent annual shareholders meeting, Mullen issued 6 proposals and they were all approved. Now, I only have a real problem with one of the proposals, and it's this. Mullen wants to increase their common shares outstanding to 1.75 billion shares. To put that into perspective, as of June 2nd of 2022, Mullen had only 477.51 million shares of common stock outstanding. So this would literally increase the overall number of shares by 260%, which would dilute the mess out of investors. This is a huge slap in the face to investors. Now, the company is trying to hide the fact that they are financially struggling right now, so they're saying that they are diluting the shares to potentially acquire other companies through acquisitions, establish new partnerships, and further the research and development of their electric vehicles and battery technologies. But honestly, I just think the company is bleeding money, and that's why they are diluting shareholders. And as of right now, I am a no-go on Mullen Stock, but always make sure to do your own research. Maybe you think that this is a good company and you are willing to take the risk, but as of right now, I just don't see that the risk is worth the reward here. Lastly, we're going to talk about Lucid, which is another electric vehicle company that sells high-end electric vehicles. Currently, the LCID stock trades for $18 per share, while professional investors think that the company is worth anywhere between $12 and $43. Now, the reason why I am actually pretty bullish on Lucid right now, even though I do think that the stock price should fall a lot more before investors decide to buy this company due to their outrageous PS ratio like we talked about earlier. But the reason why this particular news article is very positive in my opinion is that the reservations for their Lucid Air vehicle have soared to more than 30,000 reservations for the full year of 2022, and I actually like how the LCID stock has declined in price by around 51% this year, which makes the LCID stock more attractive for long-term investors. So why is this important? Well, the author of this article actually thinks that Lucid is set to reveal between around 34 to 35,000 reservations for their Lucid Air vehicle. And if we take those reservations and we multiply that by around $97,000 per vehicle, we're going to get anywhere between $3.3 billion and $3.4 billion that the company could potentially bring in. Now, hopefully management will provide additional information on that. Those are just educated guesses, but this does look very positive for this particular company. I also want to make you aware of that Lucid has increased the prices of their vehicles after June of 2022 by $10,000 to $15,000 depending on the model and trim of the vehicle. And this is going to negatively impact future reservations going forward. And although I do like this reservation news, what about their production upside and their production rate? So for me, a company is only as successful as the amount of products that it can make for very cheap, because the more products you make, you get to take advantage of what's called economies of scale. This is something that Tesla is an absolute monster at. Tesla is amazing at this, mainly because of their gigafactories, and that's why I personally like Tesla, and I really don't think anyone's going to catch Tesla in terms of their production capacity anytime soon, which is to me why Tesla is the best electric vehicle company on the market right now. So Lucid anticipates their production target for the full year of 2022 to be between 12 to 14,000 electric vehicles, which is not too bad. However, I think because of this, it's not impressive enough to maintain a stock price of over $20 per share. And because we've seen a decrease and slowing demand for electric vehicles due to this current stock market environment, this is going to negatively impact Lucid. Now, I do want to go over a couple estimates for their upcoming earnings report. For instance, their EPS on a generally accepted accounting principles basis is going to be a loss of 41 cents, or on a normalized estimate basis, it's going to be a loss of 31 cents. And of course, their revenue estimates are supposed to come in at around $157.12 million, which is technically not terrible, but we definitely should, in my opinion, wait for the LCID stock to drop lower before we start to invest, because there are big risks with Lucid stock. Mainly, the only risk that I see is their production capacity. But that's a really low blow by me, and overall, I do like Lucid as a company. I think they have good fundamentals. I just think right now, their stock price is somewhat disconnected with their fundamentals. But once those two things become in line, I would have no problem investing heavily into this electric vehicle stock. But I would love to hear your thoughts down below about Tesla, Nio, Lucid, and Mullen Automotive. Subscribe if you're new, smash that like button for more video updates just like this one, for more stock market news updates on electric vehicle companies just like this one, and I will see you in the next YT video.